Hey guys, I'm Steve, and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, please hit the subscribe button. Trust me, you won't regret it. If you're a returning subscriber, welcome back. Well, guys, listen. The job report came out today, right? And it wasn't a good report. A little bit about the job report: 263 jobs, new jobs were reported versus 250,000 new jobs of what they expected. So more people have gotten hired, right? Uh, Unemployment rate was supposed to be 3.7%, was supposed to be raised to 3.7, came out at 3.5. So these are not good from where, the Fed wanted to see them as far as dealing with this inflation. Now, in my opinion, this right here is the biggest dilemma with the Feds. Now, I was talking earlier in another video about how the Feds were in fear of entrenchment with inflation, meaning inflation to get stuck at a certain point, and it'd be hard to get it out of that point. I think this is the biggest thing that they're worried about, because, there's a lot of other mitigating factors, a lot of things that they're watching. The CPI numbers come out next week, so that'll tell them a little bit more about the other factors. But I think this unemployment job report is one of their biggest worries. Now, granted, the Fed has already said that, look, we're going to be aggressive. We're going to do whatever we got to do. You can expect, like Fed Chair Powell said in his address a month ago, you can expect a lot of pain, a lot of people losing their jobs, and a lot of unemployment and the like. But this right here is baffling. So you cannot tell me that they are not in some type of huddle right now, like, damn, this is not what we thought it was going to be, what's going on. But, with that job market situation, right? Another thing that's going to be that I'm watching personally is food, shelter, like people, buying houses, renting, and a lot of energy costs. And the reason why I'm watching this is because you could expect at least 2 more rate hikes by the end of this year. Now, the next rate hike, I'm sure, will probably be 75 basis points. Again, like it was last time, and the market fell. So I think that's almost expected. Now, the one after that, I don't know. But this right here is a very serious thing, guys. And it's affecting us all, whether you realizing it or not. I went to the supermarket the other day. Man, food is so high, because all these rate hikes, it's not just loans and stuff like that. People getting loans, and these interest rates, it's not just affecting like people going to the bank. It's affecting us, the everyday consumer in the store. Food is starting to get high, shelter, getting a new apartment. All these things are going to be, anything to take a credit check, all these things are going to be raised up because the rates are energy costs, your electric bills and stuff like that. These companies are not going to eat this cost, because this affects commercial companies. It's not affecting us directly, but we'll pay directly. So you got to watch out. So what I would say, honestly, right now, in my position, and just, you, the viewer, checking out this video, try to control your spending. That's the first thing. Try to control your spending, because, even though something is 50 cents or 75 cents higher, or this, that stuff add up. It's very easy to go in the market and spend money and then look up and be like, damn, where'd the money go when you check your balances in your bank account? This is serious, people. And, I'm experiencing it, and so is a lot of other people. But be cautious with your spending. As far as the market goes, this is what I would be doing. Well, what I'm going to be doing, because I was buying a certain amount of stocks, but I'm keeping in tune to what's being said about the future, so I won't have to, deal with a lot of things, a lot of headaches coming up with this news, that because I've already anticipated that it's going to happen. as far as the market goes, guys, listen. And I'm just a guy on YouTube, but I've been investing for a good while now, and I can only extend things that work for me, onto you guys. Now, I'm not telling you what to do or anything, but just something to open your eyes. When it comes to the market, it's going to be a lot of unsettling. It's going to be a lot of going up and down. You're going to have good days. You're going to have bad days. Stocks are going to continue to fall. I'm going to just say, if I were you guys, especially if you're a beginner investor, right, as of now, yeah, the stocks are falling and they're falling at a good rate. But I've come to the realization that these stocks are going to be falling for some time. And like I made a video about Tesla earlier today, right? In the situation with Twitter, Elon Musk and Twitter. Tesla is going to fall and it's going to keep falling, right? But it's not the only stock. So what I would do if I was, what I'm going to do, I ain't going to say if I were you, this is what I'm going to do, what I'm going to do regardless. But listen, this is what I'm going to do. I'm going to continue to buy the winners that are in my portfolios. And those are big name blue chip stock companies that are too big to fail and have been through this type of thing before and will be here after me and my children. I will be continuing to monitor and edit my portfolios, meaning a lot of stocks I may be up and have a whole bunch of shares. I might start to consolidate and move things around to free up money for these buying opportunities. I'll be focusing on great companies. Like I said, that'll be first priority. So if you have a stock that is a growth stock and you want to get into it, or whatever, before you do that, you make sure that your foundation stocks, the stocks that you plan on keeping forever in your portfolio, that they're taken care of first. And then you add, and when I say one of the things a lot of people might be confused about when I talk about my portfolio, editing my portfolio, if I have a certain percent of stocks in my portfolio, and I try to keep my stocks, because I have a large array of stocks, I try to keep them about 3 to 4% each stock of the portfolio. I don't make them 20 and 30% because that'd be a hard drop in case one of those stocks fall or fail. So say I got like 7% or another stock is 5%, I might drop 2% off of that and then add it to a new stock, or I might, just break it down to where it's about 3-4% and then add to something else that might be under 3 or 4%. That's what I'm talking about when I say consolidating your portfolio. You want to stay balanced. You want to make sure your portfolio is balanced. So make sure you look at your portfolio. Now you got some blue chip stocks and some ETFs. Like you can balance your ETF portfolio too. And also you want to make sure you got stocks. Your growth. You don't want your growth stocks unless you're doing aggressive risk. Because everybody's portfolio and everybody's trading strategy is different. So some people have more of an aggressive. Me, I have more of a moderate. But as far as your portfolio, that's the biggest thing. Make sure your portfolio is right before you even buy a stock. Don't buy stocks you don't understand, or you heard somebody else mine is going to buy the stock and you don't even have a clue about it, but you see their enthusiasm and then you jump in and buy it. Do not buy stocks you do not have a plan for in the future. And a lot of investors do that. A lot of beginning investors do that. That's where you get that FOMO from, the fear of missing out. Hey, everybody's buying this stock, man. Let me jump on it and then I'll go and research it later. You don't never do that. That is the number one reason a lot of people lose their money or lose interest in the market, because they made poor mistakes following the masses. Your investment journey is your journey, and that's it. Anything dealing with food, shelter, clothing, retail, energy, keep an eye on these stocks, because with the way this thing is going, you know, it's a lot of uncertainty in the market. And these stocks right here, a lot of times people are putting their money into. Now, as far as me, I'm not really dealing with anything, dealing with those type of, now energy I might be dealing with right now, but the other shelter and food right now, I'm not really jumping into it. And it's like, you know, my portfolio is basically set to where it is, where for life of where I want it to be as far as the companies I've picked. Now things have come along, and like, you know, my journey is not your journey. And speaking of that, in closing, before I leave out in this video, I'm going to say something real important to everybody out there, whether you're a subscriber or a non-subscriber. One of my I think he's a subscriber. His name is Wanna Know Bad, right? Brother, I got to tell you something. He lately, let me give everybody a synopsis. Lately, me and him been having little battles about the way I say things online and how I have a responsibility as a teacher on YouTube. Now, at first, I thought, you know, I might have took it the wrong way, and we had some battles in the comment section, you know. But I mean, it wasn't no disrespect. I just think it was a battle of us trying to understand each other without understanding each other. So I had to go back and look at some of the comments and the way we get back and forth. And it's all love, man, you know. But I think we both had valid points, but we weren't trying to hear each other. So I'm gonna say this on this video. I'm gonna shout him out. Wanna Know Bad? I appreciate everything you're doing, but you know, he told me I had a responsibility. And you know what? You're right, brother. You're right. I do have a responsibility. But you got to understand something too. If I drop a video like I'm dropping right now, the video come from, you know, my experience and me just expressing myself on here. Now, do I mean to make anyone go astray or anything like that? No, that's not the purpose of my channel at all. And in a way, you're right. I am teaching people some things, you know. Now, whether I'm teaching them right or wrong, I don't know that. I'm only going from my experience in the market and what works for me. Now, I appreciate everything you're saying. If I'm doing it wrong, by all means, brother, you can make you a video and I will watch you. But as far as, you know, the whole situation, it's no love loss, it's no disrespect or anything like that. And I appreciate those type of comments, you know, the honesty, because I mean, in the end of the day, it'll make me better online, you know. But yeah, I just wanted to shout them out, man. Wanna Know Bad? No hard feelings, you know. You're still my people, you know. But as far as being a teacher or anything like that, yeah, YouTube, you will get something out of it. So in a way, you are taught. So Wanna Know Bad is right. But as far as coming out and being like, hey, you need to do this or you need to do that, unless it's something that's common sense, guys, I'm just a guy on YouTube, you know, and I'm expressing myself, and I really appreciate the love and support you guys showed. And moving forward, you know, I'm going to continue to talk about what I feel is going to be right for me in the market and investing. And if you guys get some knowledge out of it, good. But I mean, understand, it's not my intention to stray anybody away or get anybody to think the way I think, you know. And that's a lot of things, you know. A lot of YouTubers come to give their impressions and they say, hey, well, you don't do this, you're stupid. If you don't do this. Listen, you know, things are what they are. YouTube's one of the greatest how-to platforms out. And if I can give a little bit of knowledge, and you can get a little bit of knowledge from hearing me and pick and choose what works for you out of some of the things I say, then my job is done. But Wanna Know Bad? I appreciate it. I see you trying to make me better. and hopefully it's working out for you too. But guys, that's what I wanted to say about this jobs report. You know, this thing right here, food, shelter, it affects us in so many different ways, and not just from the point of investing and saving up money and dollar cost averaging for stocks and stuff like that, but everyday life. You know, 2, 3, I don't know how long this thing is going to last, but it's going to be here for a while. Expect 2 more rate increases by the end of the year. I'm almost certain of it. And hold off on a lot of stocks right now. You know, build up, keep dollar cost averaging, build up your money, and strike when the opportunity is right for you, and build that generational wealth. And I'll see you guys in the next video. Continue commenting. You know, I got 10 new subscribers today. Thank you guys so much for standing by me and showing love. And I'll see you guys in the next video. Take care.